Logging into ChatGPT feels like using a simple, minimalist app, but that interface masks a dense industrial labyrinth of humming machinery. This system currently serves 900 million monthly users. Last year, that scale generated more than $13 billion in revenue for OpenAI. Based on that growth, the company is preparing to go public in the coming weeks, seeking to cement a private market valuation of $730 billion. This chart compares OpenAI's $13 billion in recent revenue against the $115 billion it expects to spend over the next 4 years. That gap represents the high cost of staying at the front of the AI race. To bridge this gap, OpenAI is asking Wall Street to fund a back-end operation that consumes capital at a rate far exceeding its current income. The success of the filing depends on investor confidence in Sam Altman's ability to manage rising operational costs while maintaining the chatbot's popular appeal. AI does not exist solely as code. It requires massive, power-hungry physical infrastructure. This is an image of a modern data center facility. To support nearly 1 billion users, OpenAI relies on modular units like these, which draw immense amounts of electricity and water from local municipalities. Expanding this footprint is becoming more difficult as communities worldwide are pushing back against the construction of new data centers in their neighborhoods. In the United States, an unlikely coalition of parent groups, environmentalists, and religious leaders has formed to resist the spread of these facilities. They cite local job loss, threats to national security, damage to the environment, and impacts on mental health. This physical resistance creates a logistical bottleneck that could prevent OpenAI from reaching the scale promised to its new investors. External competition is also tightening. Google recently announced that its Gemini app has reached 900 million active users, matching the reach of ChatGPT. A more agile threat comes from Anthropic, a rival founded by former OpenAI employees and valued at $900 billion. This chart shows Anthropic's growth trajectory. While the company initially expected to grow tenfold this year, its career rate of adoption suggests it could grow to 80 times its previous size. The two rivals also differ on safety. While OpenAI releases technology to the public quickly, Anthropic restricted its powerful Mythos technology, claiming it was too dangerous because it could identify critical vulnerabilities in internet infrastructure. These aggressive release schedules have also invited legal pressure. The New York Times is currently suing OpenAI for copyright infringement over the news content used to train its AI systems. This is Elon Musk, who helped found OpenAI as a nonprofit in 2015. He recently sued the company, accusing its leadership of abandoning its original mission to pursue commercial profit. Investors participating in the IPO will be entering a landscape defined by well-funded rivals and significant legal challenges. The upcoming string of AI public offerings will significantly increase the net worth of a select group of Silicon Valley executives who are already billionaires. This is a view of the San Francisco skyline, the hub of this wealth transfer. The offering will deliver a windfall to the tech executives and Wall Street banks that have steered the company toward the public market. This financial focus is a departure from 2015, when OpenAI launched as a nonprofit dedicated to building AI for the benefit of humanity. Completing this IPO moves OpenAI into a structure where it must prioritize stock market demands and investor returns over its original charter. The helpful chatbot interface remains the facade for one of the most resource-hungry and embattled corporations in the world. This IPO is a test of whether investors and society believe the financial, environmental, and social costs of this technology are worth the price.